All right, welcome everyone to today's live stream. Today is Monday, March 17th, 2025. Happy St. Patrick's Day for those who celebrate. I've got my green on for an up market, always thinking positively about this market. And let's dive in today. So we've got some earnings coming out. The company that I'm going to do a deep dive with today is Micron, and their earnings come out after close on Thursday. And we've got Neo, Chinese company, coming out before open on Friday. So other than that, I mean, not too crazy of an earnings week. Most of the earnings have already been reported. As I just glance at this list, probably, General Mills would be another larger company that would post. That some of you may own. FedEx, Nike on Thursday. It looks like a lot of retail on Thursday, doesn't it? Before and after the close, Land's End. So yeah, just keep your eye on that. And hopefully the stocks that you have, the earnings have been looking pretty good. So we've got an interesting stock to look at today. Probably many of you own it or have at some point, or at least familiar with it, and that's Micron Technology. And as we look at any investment, we look at, I like to start with our software right at the top of the listing, which is the chart. And charts speak volumes, even though it's a look into the past, right? Kind of looking into that rear view mirror. But nevertheless, it tells a story, and most stocks follow a pattern with trading. And the pattern that I'm seeing with this stock is it's been channeling since, meaning it's kind of moved sideways since September last year, September 2024. Stock was right around $90 a share, 95 by the end of September, and then this sideways movement that is just maddening. If you own this stock, it's just one of those things that can drive you absolutely nuts because it just seems to bounce in between the averages, doesn't it? Like we're looking at, it's bouncing between the 200 and the 50 moving day average, staying in that zone, dropping out of it at times. But now, as we look at today's price action, we've got a couple very interesting developments here. We've got the stock above the SMA 50 and right on the cusp of that SMA 200 within, $1.50 or so, or a couple dollars a share. And when it crosses over that SMA 200, that's considered a golden cross and really positive for the stock price action movement. So if you're a holder of this stock, I would say hold on to it, continue to hold. You certainly wouldn't want to sell here. The stock has, see this last green arrow, that was on March 11. So just last week, it moved above. See it, the blue box there below all the moving averages. And since then, it has moved through and above. The very next trading day, it moved from below those averages to above the short-term SMAs and the SMA 50, the intermediate term. And it's held that. That is critical to look at. It's great that a stock moves through and above those averages, but it needs to hold that position to go higher, and it did. It stayed above, and even to this day, Monday the 17th, well above now those averages. And the other thing is we've got green above red now. If you notice, the EMA moved above the SMA 15. Very, very positive from a technical perspective. And, like I say, if you're a holder if you've already owned the stock in your portfolio, continue to hold. If you don't own it, I think this is a terrific time to be buying shares. And I go down to the MFI. Let me move my picture out of the way here. Oh, just made it even bigger. Hey, everyone. Let me go back. Here we go. So look at that MFI. It is right at 49.94, sweet spot. The middle there is, as you know, the range is 0 to 100. The middle is at sweet spot, and we know that it could definitely go higher from here. It has bounced off the low MFI of 20 March 10th, when the stock was literally like on its back, like pleading for mercy from the markets at 87. And if you bought in then, that MFI at 20 would have told you, yeah, that's a buy indicator, pick up shares. You'd have a super nice return at this point. So earnings come out on Thursday after close, and these are going to be critical. The market's looking for $1.43 is the estimate per share. And I think it's certainly achievable. It doesn't seem like anything extraordinary, especially since the last quarter, their earnings were at $1.79 a share. So the market's saying, hey, we're expecting lower earnings than what was reported last quarter. So I think that's a good thing. I don't think this is a number that is out of alignment in terms of what the company can meet. So then as we look at the chart, we also want to go down to the fundamentals, and we want to look at these. We start with the fundamental metrics where you can see 96% are buyers. Very small percentage of the insiders are selling. That is a very positive sign for a stock. In terms of analyst recommendations, we're looking at, they are saying closer to that underperform category, but I think that is because it has underperformed over the last year. I mean, you can see a year's basis, a year ago is at 93.78, and so if you're looking at 103 now, that's a 10% movement over the course of a year. That's why it's low risk, and that's why it's marked as an underperformer. So I wouldn't get too concerned about that. It's had months of moving sideways, as I pointed out earlier, from, like I mentioned, the mid-September range to today, and it's just getting ready to break out here. So maybe earnings report will be the catalyst to get the stock to break out above that 200 moving day average. Very short, low percentage shares are shorted, 2.87%. That's nothing in this big scheme of things. So here's another really some big important metrics here. Financial health. As you become familiar, and by the way, welcome to all of our new subscribers. We are so grateful to have you on our platform and for your feedback and all your 5 taco ratings. You guys are awesome, guys and gals. And, we want to build one of the best platforms out there. And please continue to give us feedback, because we take your feedback very seriously, and we carefully consider it as we roll in changes to the software. So continue to share your feedback with us. We'd appreciate it. Okay, intrinsic value. So here we go. The stock is priced. The stock price is well below its intrinsic value. That's why it has a 5-star ranking. Meaning, if we look at the valuation of a company, this is what I would say value investors are really, really good at. They want to know that they're buying a stock at a good price. And the way to do that is to compare the current stock price to its intrinsic value. And if it's below the intrinsic value, then you're probably getting a good deal for the stock price. And here, this is one of the better prices to the intrinsic value that I've seen in a very long time in terms of the low market price versus the intrinsic value price. So there's a lot of value built into the stock. We know it. They're a leader in their field. Phenomenal company. Debt to equity ratio. So total debt is very low considered as we look at the equity. That's what you want to see as well, that a company has equity and less debt. The operating cash flow is in line with expenditures, not above it, but certainly in line with it. and there isn't any levered free cash flow to talk about. So that's why there's no comparison there. Next, we move on to financial metrics. Look at this growth rate. Come on, y'all. 84% is incredible to grow their revenue. This is year over year, but on a quarterly basis. So they had a really nice uptick the last quarter. And, you know, that's looking really good. Now, book value. Book value is an interesting metric. This is the metric that if you took a company's balance sheet and sold off everything in a fire sale, this is what the stock would be worth per share, 42.01. So some might say, well, you know, just from this metric alone, I'd stay away from the stock. And I don't think I would shy away from a stock because it trades above its book value. Many companies do, especially in the technology space. So I'm just scrolling back up here, looking at the price to earnings ratio at 29.79. You know, frankly, that seems quite reasonable for a technology company. What else do I want to point out with this stock? So I, you know, again, if I were a holder of the stock, I would continue to hold. If I don't have shares, this might be a terrific time to buy in. You know, I am mindful of what is happening in the market. So you wouldn't want to put all your eggs in this basket, but you could certainly pick up some shares and then hold some cash in reserve. So we've got the Dow up at the moment, 1.11%, making a nice move today. The NASDAQ too, up $119. Crude oil is up slightly, silver down slightly, Bitcoin up a bit. I'm going to do I think next Monday I'll do something on Bitcoin because I want to talk about the reserve that the US government has set up, and I want to bring to light some issues that I have found about this. So if any of you are crypto investors, you'll definitely want to tune in next Monday for that call. So yeah, that's my, we have a hold rating on the stock. I agree with that. If you own it, if you don't, I'd say buy it. I think you can buy it here, especially once it ticks over this 200 moving day average. You've got a golden cross scenario and a stock that will move higher. I want to point out, this is so many people ask me, what service do you use to buy silver and gold? And this is who I use, silvergoldbull.com, .ca if you're in Canada. We've worked with them for years now. They've been fantastic, never had an issue. And you can go to the website and it will bring up the current price of gold, which is $3,001.76 an ounce. And silver, this is in US dollars, silver is $33.92 an ounce. And then if you click one of these, gold or silver, up pops this chart and you can keep up with market trends. I really like this. I think it's an interesting visual display of the performance of gold, and then you can overlay it. Here's gold, by the way, there's silver, gold again. You can overlay it with like the Dow or the S&P 500. So on a year basis, we're looking at gold completely outperforming both of these. Are you seeing that? You got the Dow in the forefront here, the S&P in the green, gold in the gold color. Let's look at silver over the course of a year. Same thing, silver outperforming. So I don't think you can go wrong with having gold and silver coins in your investment portfolio. And you know, mining companies as well are interesting. You just have to be really careful what part of the world they're mining in, how safe and secure that is. You know, if there's a slide or something that happens in a region, you know, the mine closes. So it goes to zero. So there's risk involved with owning mining companies. That's why, in fact, there's a lot of risk involved. That's why I really like just buying the gold and silver coins. I just love it. we call Fridays Financial Fridays, and that's when we go in, place our order for either or, depending on where we're seeing the prices go and where we think the better investment is. And I really don't think you can go wrong picking up coins at this level in terms of the market. With so much happening in the market, I think it's not only a safe haven, but a fantastic investment for you, for your family, and loved ones in the future. Can be an amazing investment. So that's what I've got today. Hope this was helpful for Micron. Tune in next week. I'm going to do a deep dive on this Federal Reserve crypto. It's not what you think it is. Let me tell you, it's just not what you think it is. There's a lot to unpack with that. And